The precise reasons why about 97% of all traders lose money, and not just in crypto, in any market for that matter. This is going to be a very unusual, honest video that most people will probably dislike. So big warning, and reason for that is that it's very unconventional and very untraditional. We're going to be discussing tools and methods and reasons for people losing money that nobody else, for that matter, has ever discussed in social media. Most people really paint a very beautiful picture of trading. They paint an incredible picture of crypto, how you just take $1,000 and turn it into a Lamborghini in like 6 weeks. So this video here is going to be very honest and very different from every single other one. So spend your time, have a look at it, and you will gain a very good understanding for how the market really works and why the big people with real good understanding of all the instruments constantly and consistently make good returns, while 97% of retail that doesn't have this information actually fail. So let's get into this. And first I will introduce myself a little bit, and then we're going to get to the real problems that people face and the actual reasons why everybody fails. And then I'm going to lay out my strategy that I've been using for the last many years that really made me successful in this industry. And then you can decide for yourself if you use it or you try to pursue some fairy dust that is just incredibly, not just difficult, to be honest, just impossible to catch into your hands. So let's get into it. Over the last 6 years, just a bit of background, I've grown my personal capital in crypto by over 40x, 40. And right now I'm going to explain why most seasoned traders will not achieve even a 10x return in this current cycle. And most importantly, as I've said before in the beginning, why around 97% of traders actually lose everything. It's just a sad statistic, but it's true. But before I do, I want to point out that achieving a 10x return in crypto, it's absolutely doable, but definitely not in the way that most newcomers or TikTok influencers promote it. Over the last 11 years, through systematic investing, and not just in crypto, by the way, but also across various other markets, I've grown my initial capital of about $15,000 into more than 75 million, certainly including the capitalization of my company, such as Evex, etc. And it's not hype, it's simply the outcome of disciplined and strategic investing over multiple market cycles. And just to point out the obvious, my journey in personal asset management and capital creation, preservation, and multiplication and across various markets didn't start with millions of dollars and huge connections across the industry. I grew up in Latvia, lived a very modest life, grew up without a father, and after moving to the United States, I worked a minimum wage job in a library at my college where I studied. And I built my first capital from absolute scratch by flipping old cars and electronics and even furniture. So this is where my wealth building started, and really at baby steps, to be honest. And probably the biggest turning point in my life was meeting Alf through my mother, just by coincidence, a Swiss asset manager who taught me genuine systematic investment and trading and the right approach to the market in general, which have changed and altered throughout the years, but it was a very good foundation. At that time, after meeting him, I dropped absolutely everything, including college, well, thanks for that, and a stable job that I had, which was quite stressful. And I spent 6 months learning from him, and for that I had to move back to Europe. And my first major trading experience nearly costed me my entire savings of about $15,000. But that became the foundation of my professional growth and my experience. And subsequently, by the age of 23, 24, I had earned my first $1 million, and it took me years to get there, just to be absolutely honest here. And today, my life is completely different. I kept evolving and I kept opening new doors. And currently, I had one of the top financial academies and serve as the chairman of decentralized crypto exchange and financial ecosystem called Evex. You can Google what that is. We've built a complete ecosystem, including a financial academy and analytics department consisting of experienced traders and analysts, also 2 separate SEC-regulated crypto funds, and our own decentralized, again, Evex, our own decentralized exchange an ecosystem. Now that I've introduced myself, laying the foundation of why am I even qualified to talk about the things I'm going to talk about here, let's get into the topic of common basic mistakes that you will make if you try to grow your capital using basic strategies, chasing that 100x. We will get the basics out of the way, and we will shortly get into some more technical stuff that will be very eye-opening. The first obvious huge mistake is buying the hype. People jump into crypto when everybody's talking about it. Naturally, early investors who bought those assets before they became popular are already cashing out huge profits, while the actual 99% become exit liquidity, and they're buying overpriced assets. And to avoid this, you need market knowledge and experience, as well as experts highlighting new opportunities so that you're early in the stuff and not late like everybody always is. Second mistake is lack of strategy. Most don't even consider that investing requires a strategy. Investing isn't just buying and selling. It involves deep understanding which assets to buy, at what price they're actually priced well at, and crucially, when to sell. Buying coins in general is easy. You certainly need to know which price is good for a certain asset, but that's not the hardest part. The hardest part is knowing exactly when to sell so that you don't regret missing profits down the line. Third basic mistake is chasing stupid quick returns. Everybody wants 100x, but few consider risks, fundamentals, or diversification. Crypto is often portrayed as quick money. And while quick returns do happen, and I've seen it personally, you must be realistic. You might buy a coin that returns 50x, and I've had such cases myself, but if you're smart, you will not risk your entire portfolio on it, and you will only invest a small portion. Other coins will yield maybe 2x, maybe 5x, some might go to 0, and so on, and the average return factoring good and bad trades can be 5 to 10x with the right strategy. Without a strategy, even a 10x return is actually amazing unless you just get lucky. And certainly it's also here worth to mention that you must be ready to wait and accept that markets grow when they are ready to grow, not when you want it to happen. Be prepared to wait for a year or maybe even 2 years. Many people lose money expecting 10x next month. Fourth, common and basic mistake, and that is distrusting knowledge. Instead of taking a systematic approach and developing a strategy, people prefer subscribing to 50 signal channels, and of course free ones, thinking more signals are better. Listening to 50 conflicting opinions is not going to get them anywhere. It isn't better than understanding the market yourself and having your own tailored strategy. You need independence and a strong community where you complement each other and make money together. But it has to be one place. The fifth and last, before we move on to the depth and to the juice of this video, fifth and last common basic mistake is ignoring risks. Many seek one coin to make them rich. A money button that you click and just money falls from the sky. The truth is that button isn't one action. It's a combination. A complete strategy. Beginners want everything immediately, right now, here, today. And they absolutely ignore risks, forgetting they could lose it all tomorrow. And those dreams of big money cloud their judgment, leading people into scams and financial pyramid schemes. And all of these 5 are the basic mistakes that prevent people from successfully building and consistently growing their capital. But as promised, these are just the basic ones. Now let's go deeper. Here is why 97% of traders actually lose money. And the secret here is that they use the wrong tools at the absolute wrong time. Let's take trading, for example, active trading, predicting the smallest market frequencies and trying to use futures to really 10x your money in 3 weeks. And just as a side note here, trading is a great tool. I personally love trading. However, it is all not rainbows and unicorns. It is a great tool, but only statistically 20% of the time. To make that Lambo money in trading, you need the market to be volatile, which means that it moves hard up or down. But statistically, 80% of the time, market is absolutely flat. It's just statistic. It's just not in just crypto. It's in any market. 80% of the time, market doesn't move. In a short-term time frame as well as long-term time frame, etc., which is quite crazy to realize, because during these low volatility times, it's less liquidity in certain pairs or assets, etc., which is what? Exactly. It makes it much easier for big market players, such as market makers, whales in crypto, etc., to manipulate the price. And to not to mention the fact that for you to make money, the market has to move. So this environment, in reality, statistically and mathematically, if you don't believe me, you can talk to ChatGPT about this. It's going to confirm every single word I'm saying here. This time is a zero-sum game. So 80% of the time, when you're trading actively, you will lose. Statistically, mathematically, factually, historically. And when somebody's telling you, yeah, you can trade at any given point in many market conditions, is a freaking liar. So it doesn't work in this way. So just to sum it up about trading, it's a good instrument, but it works only 20% of the time. The rest of the time, it's a disaster. That's why some people get lucky while others lose everything. And sadly, it's not even 80% of the people that lose everything. Because guess what? Most people don't even know how to trade correctly during the right time of the market. Therefore, we have this 97% of people that lose money in trading overall. The only way to survive and make money consistently during all 100% of the time is using a balanced system that accounts for this reality. And this is the same approach, the same concept, the same logic that is being used by hedge funds, by institutionals, by asset managers, by professionals. Because if you check any hedge fund out there that manages a lot of money, you will rarely find they are non-existent, the actual asset managing entities with big capital, with smart people behind them who would be doing just only active trading. Certainly there are high-frequency trading funds, but those are exploiting the imbalances inside the price. They're actually not that very much forward-looking. So they're not really predicting the price. They're using algorithms to exploit the imbalances in the price in the moment, sometimes within a few seconds or milliseconds. This is different. This isn't trading. This is actual algorithmic stuff. And it's got nothing to do with trading oftentimes. And the actual prediction of the price. So therefore, the hedge funds and the institutionals, you will almost never find them just doing only trading. They have a balanced approach. And a lot of the things which I'm going to discuss now going forward actually are the instruments used by crypto hedge funds, institutionals, and the smart money. And in this way, they gain an advantage over retail, over you. When you're trying to trade in the time in a market, which is a zero-sum game, you're simply feeding your money to these smart market participants. And the right approach here consists of many tools, so we'll get into those. And just in general, conceptually, it means when you're using the right combination of tools, it means that you're always flexible. When the market is slow, and it is expected to remain so for an X amount of time, for example, will reduce exposure to trading and high-risk investments and shift our core focus to other instruments, primary market deals or over-the-counter deals, as well as different tools for passive income. Because a lot of people, again, as a side note, think that crypto is just about buying coins or holding Bitcoin or trading futures. By far, that's not it by far. It's about, I would say that it's about 10 to 15% of what a person can do in the crypto space. And this is what we also do. We invest in Bitcoin, we invest in spot, we invest in some meme coin sometimes when there is a meme coin narrative, depending on the market narrative. So we are flexible between those things, and we're going to discuss it in more detail. But that's not all. When the market is flat, when it's quiet, we focus our capital on, for example, passive income growth. There are instruments such as staking, there is liquidity pools, and one of my favorite tools is funding rate arbitrage, which is not to be confused with a regular arbitrage, which doesn't work anymore. It's like basically buying crypto on one exchange and then sending it to the other one and selling it for more money. So it used to work. That's how Sam Bankman-Fried made his initial billions or whatever. But that doesn't work anymore. These inefficiencies, these gaps have been shrunk down to almost zero, and now these high-frequency trading funds actually take care of those inconsistent imbalances inside of the price action. So, but I know it's complicated talk. I will try to speak in simpler terms. Funding rate arbitrage is a different tool. There is a thing called the funding rate, which is unique to the crypto space. And if you you can Google what it is and it's going to give you an answer. It's not that complicated, but this tool with almost basically zero risk in comparison to staking or liquidity pools can provide you 10, 15, 20, 30, 40, and sometimes upwards of 50 to 100, rarely, but 50 to 100% yearly return with almost zero risk. So while others are trading with at a zero-sum time when everybody's losing in trading, there are other people who are utilizing funding rate arbitrage and they're making very good income. So, and this is already, they're getting an edge over others. They're utilizing DeFi, they're utilizing liquidity pools, staking, liquidity provision if you have big capital, etc., etc. But these are just passive income tools, and there is a couple of other ones that I didn't mention that we utilize in our strategy as well. Then there is the approach to early stage deals. So, and OTC deals. So let's have a deeper look at an early stage deal. And this is just basically one tool in my strategy that 99% of traders don't use or don't even know about. It's investing in early stage projects that can actually deliver over 10x, sometimes even 100x, and give you an edge and advantage over the rest of the market participants. Let's dig a bit deeper into this so you have a clear picture. For sure, buying coins on established projects that are already trading on exchanges can yield profits of 2x, 3x, maybe 5x, and then if you're lucky, more. But these projects already have huge market capitalizations and high liquidity. For example, take Ethereum. For example, its current market capitalization is about 400 billion. For Ethereum's price to double and give you just a 2x return, another 400 billion has to be added to its market capitalization. That's a massive amount. It's not coming quickly nor easily. And that is the primary reason why it's tough to get a 10x return from projects that are already listed on tier 1 or tier 2 exchanges, so Binance, Bybit, etc. And this is why, if you want to have a real edge and a real advantage and make big returns in a more controlled environment of 10x or more, you need to invest at the earliest stage possible before the projects even hit the exchanges and when the retail starts buying them like crazy. And these investments happen on what's called the primary market. Where you are trading like Bybit, Binance, this is the secondary market. There is actually what's called the primary market, and it's just as huge, if not bigger. Most people have no idea about the primary market, and even those who do often lack access to it. It's on the primary market where the modest investments can generate massive wealth and relatively quickly. So let me break this down in simple terms. Early investors, a very blunt example, bought Solana at about 40 cents, and it was not available to the public. And at the time, it was almost unknown. And at its peak, that turned into a 70,000% gain. If you bought Solana off of the market, you might have done, I don't know, good returns, 10x, 20x, 30x, but not 70,000%. This is available only to the insiders and people who have access. Another great example among hundreds and thousands of examples is Sui. You all guys probably know Sui, which early investors got at the price of 4 cents. And it peaked at 135x, which is a crazy return and gives you a huge edge over other market participants who are just trading futures. But yes, these private opportunities and exclusive deals are not accessible to ordinary investors who are trading on Bybit. Even having plenty of money won't grant you access without the right connections. These deals are typically reserved for whales and big funds, and those who always have the advantage. Well, it's sad. However, the good news here is that my members of my close community actually gain access to such exclusive opportunities together with me. And that's how they gain an advantage over other wannabe traders that trade themselves to absolute zero sooner or later with a 97% probability, which is the official statistic. And certainly early stage investing, it's all great, but these projects are not infinite. There is only a set amount of good projects coming out every month, every quarter, and every year. Most of the projects are still garbage. Other great tool is the OTC deal. So you need to know how to really pick good projects, obviously, to minimize the risk. But another good tool that is also not available to the public is called the OTC deals that also our members get access to. And let me open up on this method a bit and open your eyes to it as well, and why it actually provides a huge advantage and an edge as well. It is basically when you purchase coins that are already in the market, so secondary market, they're being traded on Bybit, Binance, etc., but you're getting it at special prices, boosting your returns and lowering your risk. Me, together with my community members, we enter many of these deals together, and we regularly get offers to buy coins that are traded publicly, good coins, at a discount of 30%, 40%, 50%, etc., thanks to solid relationships with large funds, mainly thanks to Evex, and project teams. From the list of the previous deals in the last few months, we've done Wormhole with a 50% discount, we've done IOTA with a 40% discount, we've done Toncoin previously with a 30% discount. These are not huge differences, but over the long term, all these things and methods and proper capital allocation to the right method at the right time, including trading when the market permits, gives you an insane edge over all these wannabe traders. But going back to the OTC deals, entering to these deals is expensive and exclusive, but as a part of our benefit of our community, our members actually pull together capital and participate in those together with us. And also, as the added benefit for our members, our team offers an exclusive private financial audit service where we help analyze, optimize, and rebalance the members' entire financial life. So their investments, their regular income, their passive income, their expenses, taxes, etc. Complete restructuring. Furthermore, we help members grow their investment portfolios in a smart way across all areas, all of which is customized to each member's individual goals, because everybody has a different point A, different point B, different risk tolerance, etc. In this entire strategy, we use OTC deals, early stage deals, passive income strategies that I've discussed, spot portfolio building, active trading when the market permits, etc., and a really large number of tools. Now, when it comes to spot portfolio building and actually acquiring existing assets and building a portfolio for a long-term gain, we build different ones depending on the market narrative. That's also a big mistake of beginners. And when it comes to spot portfolios and actually accumulating promising assets on the secondary market for short-term, medium-term, or long-term performance, we do so by being flexible and by building different portfolios depending on the market narrative, which if you're not doing this, it's also a huge mistake. And each portfolio has different allocation and risk level. Every asset for each portfolio is strategically chosen based on the market trends. For example, during a brief meme coin season, we allocated a portion of the capital to this trend. Holding money in some DeFi stuff when meme coins are trending makes no sense. So we shifted some of the capital to this trend to maximize the return and gain the edge over others who are just sitting in garbage. And we were investing in coins that delivered several 100% profit, sometimes within days, but for only a certain portion of the portfolio. And certainly we also have a DCA, dollar cost averaging portfolio of high potential altcoins, as well as long-term conservative portfolio, which all just stems from a strategic approach to building wealth in crypto and not focusing on just one thing that is bound to fail sooner or later. It's flexibility that wins in this entire game. And overall, this combined approach can yield upwards of a 10x or more growth in a single market cycle when the market actually goes parabolic. And as a cool side note, here in Dubai, my team of traders and analysts closely monitor markets 24/7, news, global economics, and actively are managing these portfolios and engaging in short-term trades when the market permits for additional income when it is actually possible and when we are in those 20% of the time. And all this is available to our members, and this personalized approach sets us apart from 100% of course sellers that sell smoke on 10x your money in 3 weeks using high-risk, over-leveraged futures type of strategies. We've built tailored systems for professional capital growth similar to those used by hedge funds and professional asset managers. This is the only smart approach if you really want to be consistent. And with our team, you actually get 1 year of strategic support which is right now super important for maximizing the returns from the upcoming bull market. You also get access to Zoom sessions with top traders and analysts from my team and my team in general. You also get exclusive access to OTC as well as early stage deals that I've described. You also get portfolio analysis and a full audit and a personalized strategy tailored to you. And we also have cool offline events in Dubai. But a quick note, we don't accept anyone. It's by application only. But at this point, it's important to know that we don't accept just anyone. It's by application only. If you have at least $10,000 in capital and want to be smart about your capital preservation and multiplication, apply for a consultation using the link below this video. The call is absolutely free. During the call, we will explain how the entire process actually works in more detail. We'll demonstrate our platform and how everything is actually organized. We will analyze your personal situation, and the team will provide a clear step-by-step action plan tailored to your specific situation. So get on a call with my team. You risk absolutely nothing. At worst, you gain a clear understanding of the market, and at best, you join other members and gain an edge over 99% of wannabe traders, as well as gain access to exclusive deals that are not available to the public and never will be. And you can certainly do nothing and go alone, or you can book the call and step towards strategic, smart capital management. The choice is absolutely yours. Therefore, if what I've described in this video has resonated with you in absolutely any way, click the link below, complete the form, and book your call. We'll analyze your situation, help you create a professional strategy, and maybe this becomes your getaway to a completely different and a completely new level of capital management. See you on the inside.